Girish Madan, director at Fitch. Fitch actually has come out with a very interesting note on the energy space, power in particular, and saying that 7 to 8% demand increase is being seen, and they're talking about the big manufacturing-led push to the power demand. Girish, afternoon. Thank you so much for your time. Very interesting note. Talk to us about where exactly in the power basket are we seeing highest amount of activity in terms of addition of capacities?
In terms of capacity addition over the last few years, we have seen large part of capacity addition has happened in the renewable space. If we talk about last 2 years, around 40 gigawatt has been added in India, and 80% of that has gone into solar and wind capacities, mainly solar capacities. So that is where we have seen capacity addition happening. Uh, we have seen some volatilities as far as the demand was concerned before COVID. So there was a slowdown in capacity addition, but sustained demand over last 3 years have led to again increase in capacity addition. And going forward, we do see some push on the addition side, both on the renewable as well as on the thermal power generation front. Uh, 4 years back, there were concerns that thermal power may not be required as much. PLFs were coming down for the operating plants, but last 3 years of strong demand growth could change that in near future. We could see more thermal capacities coming online.
Right. Girish, I want to understand from you, from the COP28 targets which we have set, most of the companies, you know exactly how capacity addition is happening. What is the longevity of this theme? Is power and electricity like a decadal theme in India? Because investment is pouring into generation, transmission, wires and cable, the entire value chain. Do you see this is the longevity of this theme is very high? The demand will remain very good for a longer period of time?
Yeah, certainly the demand is there, which we have seen a strong trend over last 3 years. It may not sustain at current levels of 8 to 9%, but there will be strong demand at least above 5 to 6% levels. In addition to demand, there is transition also happening in the sector. Means more and more power needs to be supplied through the renewable generation. India is committed towards its COP26 target, as well as long-term 2017 net zero target. So, with increasing renewable generation, there is demand for the renewable capacity addition as well as capex on both the transmission and distribution grid side, because renewable generation is inherently volatile as compared to the thermal generation, which is relatively stable. So, to accommodate this volatile generation, you need the storage both at the transmission side as well as the distribution side, and the capex requirement would be enhanced. And as you rightly said, this is not a 2 3 year phenomenon. This transition is going to continue into say next decade or so. The NTPC has announced a 2032 target of adding 60 gigawatt of renewable capacity. So corporates are planning for next decade of growth as far as renewable capacities are concerned.
Well, before I let you go, out of the entire power value chain, you have been a very close observer. Where do you think highest earnings growth is going to come next decade?
As a rating agency, we concentrate more on the broader themes in terms of EBITDA generation. Profitability is something we keep an eye on. But speaking about where the earnings growth could come in, uh, it would be a combination of both generation side, where we have seen large renewable capacities being added. We have seen some pressure on the earnings because tariffs were coming down as competitive intensity was increasing in the sector. But of late, the profitability should increase because some of the variables have turned in the favor of Gencos, be it in terms of the receivable days coming down, more stability on the interest rate, as well as some of the commodity prices have come down, which was a risk that 1.5 years back, especially on the solar module front, we have seen 20 to 30% correction in the prices. So all these factors should lead to enhanced EBITDA generation as well as profitability for these Gencos.
Right. All right, Girish, we'll let you go on that one. Thanks so much for joining us on the show today.
If you like this video, then like, share and subscribe to ET Now.